Right.
Okay, awesome. Hi, Saikat. Saikat, can you enable your video, please? We are live on YouTube.
Ah,
Okay, awesome. Awesome, awesome. So, firstly, Saikat, thanks a lot for taking out your time for doing a series, a webinar on taxation. Yeah, I'm pretty sure that especially today, where a lot of people would be have a fair idea. Although this is as per the old regime that you will be walking us through, but it would be. I'm pretty sure it would be very helpful for all the audiences. Saikat is a kind of a veteran in the taxing whole industry. He has been with Clear for last 5 years and has a ton of experience in the taxing industry. Particularly, he has worked also in the big four companies and then made a shift to Clear. He will be walking us through how does the taxation for traders work, and I will also give you like hints and like or tips and how you can save the best of your taxes here. So, Saikat, over to you. Thanks for coming, joining in once again. Yeah.
thank you. Thank you for the introduction. Hi, welcome. I would like to welcome you all for joining with us today. And we are going to take a look at today the taxability of capital gains and related things, right? And after that, we are going to take a look on how you can file your tax return in ClearTax platform in very less amount of time, right? And we are actually in the middle of tax filing season, and it is actually very best if you file your tax return as early as possible. And ClearTax in this way will be able to help you out to file your tax return without any fuss. Now, let me just quickly present the screen. Right. So today's agenda, we are going to understand the taxability of capital gains. Okay, so we are going to talk about capital gains and uska taxability कैसे होता है, and we are going to understand what is capital gains and what is the implication of how the different taxability actually comes into picture depending on the holding period and everything, right? We are going to look at transfer कैसे होता है, capital gains का incidence कब arise कर रहा है, and as we know, there are different holding period for different classes of asset. तो उसके बारे में हम लोग थोड़ा बातचीत करेंगे, which is going to be very important and crucial for this year's income tax return. Also, कैसे tax saving opportunities present करता है itself for long-term capital gains, and what are the implication or compliances related to capital gains. We are going to take a look at that. And finally, advanced taxes. This is a situation wherein very less number of people are aware of, and at the time of filing their tax return उनको एक additional amount देना पड़ जाता है for interest, just because उन्होंने थोड़ा बहुत advance tax pay नहीं करके रखा हुआ है. So we are going to take a look at how this situation can be avoided. Now, before starting the discussion about capital gains, it is crucial to understand कि capital asset होता क्या है, right? So in broader terms, or rather as per the Income Tax Act, any property of any kind held by any person is considered to be a capital asset. However, this is the dictionary definition of capital asset. In the eyes of Income Tax Act, उसमें बहुत सारा चीजों को exclude करके रखा हुआ है from capital asset. For example, the movable asset, right? From the definition of movable asset, it has been the car, motorcycle, your motorbike, your clothing, laptop, etc. All those things have been excluded. Uh, right. However, movable asset में पेंटिंग्स, आर्ट, स्कल्पचर, गोल्ड, ज्वेलरी, बुलियन एटसेट्रा को इंक्लूड करके रखा हुआ है. राइट. अच्छा, नॉट ओनली दैट, इवन दो सम एसेट्स वी फील के ये हमारा कैपिटल एसेट हो सकता है, फॉर एग्जांपल कार, उसको हम लोगों इनकम टैक्स एक्ट ने छूट देके रखा हुआ है फ्रॉम बीइंग कैपिटल एसेट. नाउ इफ वी लुक एट द मोटा-मोटी overall formula of capital asset, which comes under the purview of capital gains taxes. Those are shares and securities, mutual fund units, debentures, bonds, gold itself. So all those things come under capital asset. So if you are wondering capital asset क्या होता है, so now you have the answer to that. Now, having understood the capital asset, now let's try to understand what constitutes a transfer. Because transfer जब होता है capital asset, तभी उसका उसका incidence of capital gains arise करता है. Right. So to understand this, we should understand that what transfer actually means. Now, transfer actually means is sale or exchange or relinquishment of an asset. मतलब अगर आप कोई एसेट को सेल कर रहे हो या उसको एक्सचेंज करके दूसरा कोई एसेट लेके आ रहे हैं, या तो फिर वो जो एसेट है उसके ऊपर से आपका जो राइट है इट्स गेटिंग एक्सटिंग्विश्ड. राइट. तो ये सारा सिचुएशन में हम लोग उसको ट्रांसफर ऑफ कैपिटल एसेट मानते हैं. नाउ एक्सटिंग्विशमेंट ऑफ राइट, टू अंडरस्टैंड दिस we have an analogy, or rather we have a situation. मान के चलिए there is a company whose shares you are holding. That company has gone into liquidation. ठीक है. तो liquidation खत्म होने के बाद वो कंपनी का अभी कोई existence नहीं है. Yet you are holding the shares of that company. Yet you are holding the shares of that company. Right. So in that scenario, we can consider that extinguishment of asset has happened on that particular class of shares or class of asset. Not only that, अगर कोई bond or mutual fund units we are holding on that, मैच्योरिटी हो रहा है, उसके ऊपर मैच्योरिटी हो रहा है या तो फिर रिडेम्पशन हो रहा है, उसको भी हम लोग ट्रांसफर के हिसाब से कंसिडर कर सकते हैं. राइट. सो दिस इज हाउ दिस ट्रांसफर actually takes place. Now, holding period of an asset. Now, holding period of an asset plays a crucial part in holding period of an asset plays a crucial part in taxation of an capital asset, right? So if the holding period is more than 24 months in certain classes of shares, in that case that becomes a long-term asset. If it is less than that, it becomes short-term asset. So holding period has been classified or has been made different for different categories of asset. So अगर हम लोग बात कर रहे हैं इक्विटी शेयर्स का और इक्विटी ओरिएंटेड म्यूचुअल फंड्स का, in that case the holding period to be considered as long term capital asset is more than 12 months. अगर कोई इक्विटी शेयर आप 12 मंथ से ज्यादा होल्ड करके रखे हुए हो तो इट बिकम्स अ कैपिटल लॉन्ग टर्म कैपिटल एसेट. उसको अगर आप उससे कम ड्यूरेशन तक होल्ड करके रखे हुए हो, right, up to 12 months, in that case that becomes a short term capital asset. अच्छा, जनरली स्पीकिंग जो भी एसेट क्लासेस है उसका होल्डिंग पीरियड लॉन्ग टर्म होने के लिए रहता है 36 months. However, there are three exceptions, right? For one of the example is equity or equity oriented mutual fund. Number two is unlisted shares or immovable property. Unlisted shares in the sense के मान के चलिए आप कोई आरएसयू वगैरह होल्ड करके रखे हुए हो, तो उसके लिए होल्डिंग पीरियड रहेगा 24 months टू बी कंसिडर्ड एज लॉन्ग टर्म एसेट. अच्छा, अगर आप कोई इमूवेबल प्रॉपर्टी से फॉर एग्जांपल एक बिल्डिंग होल्ड करके रखे हुए हो तो उसके लिए वो ड्यूरेशन रहेगा 24 months, right? All the other classes of asset, it has a holding period of 36 months, right? Now short term gains जो रहता है, इसका taxability आता है based on the slab rates. So if you are on the higher slab rate, that is 30% under both the regimes, तो उसके चलते कैपिटल गेन्स, शॉर्ट टर्म कैपिटल गेन्स के ऊपर आपको 30% के हिसाब से टैक्स देना पड़ जाएगा. बट इफ you are holding, or if the gain is arising for on short term asset which are equity shares of Indian listed company, in that case the capital gain rate is 15%. Excuse me. Right. So this is how the short term is considered and taxed. If any asset is hold for a period in excess of 12 months or 36 months or 24 months for different classes of asset, that becomes our long-term capital asset. Now, long-term capital asset का जो tax rate है, that is 20%, right? तो अगर हम लोग जनरली बात करें तो लॉन्ग टर्म कैपिटल एसेट का रेट रहता है 20%. हाउएवर स्पेशल केस है in case you are selling equity shares or equity oriented mutual funds. In those cases, a special provision is present wherein आपको जो गेन मिला है उससे सबसे पहले एक 1 लाख रुपीज का डिडक्शन मिलेगा. उसके बाद जो गेन बच रहा है उसके ऊपर 10% के हिसाब से आपको टैक्स देना होगा. दिस गोज विदाउट सेइंग कि ये 10% रेट के ऊपर सरचार्ज और सेस जो भी एप्लीकेबल रहेगा वो रहेगा. राइट. नाउ पॉइंट टू बी नोटेड इज this 1 lakh rupees, the deduction works in a different way, right? हम लोग जैसे सैलरी का अगर हम लोग देखते हैं तो सैलरी से हम लोग एटीसी का डिडक्शन ले लेते हैं, एचआरए का एग्जम्पशन ले लेते हैं. सो इनकम एक्चुअली गेट्स, टोटल इनकम एक्चुअली गेट्स रिड्यूस्ड. हाउएवर अगर आप कैपिटल गेन्स कर रहे हो, कैपिटल गेन्स यू आर अराइविंग लॉन्ग टर्म कैपिटल एसेट, so it will always be the entire amount of gain will always be part of your total income. But जब टैक्स कैलकुलेट होगा, from there we are going to reduce this 1 lakh rupees, and then on the balance amount we are going to include the rate of taxes. So this is how it actually works. Now listed equity shares में long term assets में there is a benefit called indexation, right? So indexation in general term it means the upliftment of cost. ठीक है. So if you are if you have purchased an asset 4-5 years back or 6 years back, in that case the price of that asset could have moved leaps and bounds, right? To adjust adjust the cost to bring it to today's standard, the income tax department generally issues a indexation point each year. Now by using these indexation points, we get to know what is the actual cost of acquisition, or index cost of acquisition for the asset. Now, indexation actually happens at the time of filing the income tax return. ठीक है. तो normally जब भी ये मिलता है, इंडेक्सेशन बेनिफिट मिलता है, तो उसके ऊपर उसको ऐड इन करके उसको शो करना रहता है. बट द पॉइंट इज इफ यू आर फाइलिंग थ्रू क्लियर टैक्स, द इंडेक्सेशन पार्ट इज taken care of automatically. So there is no trouble for you to go in there and search for indexation points. Talking about indexation points, however, the indexation points are not actually applicable on equity-oriented mutual funds or listed equity shares, because these indexation points are applicable on unlisted shares. It is applicable on bonds that are purchased till a certain period. So indexation points, the long-term capital gains works in this way. Also, the general rate of indexation, long-term capital gains is 20%. 20%. However, for listed equity or equity-oriented fund, it is 10%. Now, point to be noted over here, listed means any share that is listed in India. Right. Any share which is listed outside India, that is considered to be as unlisted shares in India, because listed shares in the eyes of Income Tax Act is any share that is listed in any of the recognized stock exchange. All right. So this is how it is. Okay. Now, tax saving opportunity on capital gains. Now, tax saving opportunity on capital gains is present However, the scope of it is very limited. As of now, there are three sections under which you can take benefit of tax saving. There are three sections under which you can take tax saving benefit. One is section 54, one is 54F, and one is 54EC. Now, these three sections work completely differently. Section 54 comes into picture if you are selling of an asset, and selling of an asset being a flat or land or building, and section 54F comes into picture when you are selling of a asset, long-term asset, and purchasing a flat or a building or constructing a building. 54EC, this is completely different thing. So basically, in case you are selling of a flat or immovable property and then investing in a certain kind of bond, then section 54EC actually kicks in. Now, so for all the purposes, section 54F is the way to go for people who are dealing with shares or mutual funds. Right. So if you are selling off any long-term asset, being share or equity-oriented mutual fund or any other mutual fund for that matter, in that case, if you have a substantial amount of gain and you are planning to purchase a flat or build a house, in that case, you can take benefit under section 54F. You can simply utilize the amount of sale proceeds and construct yourself a house or buy yourself a house or flat. However, the entire amount of gain may not be exempted in this case, because to get the benefit under section 54F, you need to be investing the entire proceeds of sale in purchasing a flat. Okay. So if you are, let's say, investing a proportionate amount, let's say the total sale proceeds is coming to 40 lakh rupees and there is a gain of 10 lakh rupees. Now you are able to invest only 20 lakh rupees. So in this scenario, only 5 lakh rupees will be exempted. Remaining 5 lakh rupees will not be exempted. Okay. Now, section 54EC, actually, if you are selling off a property and buying a bond, in that case, this gets attracted. However, certain bonds are very much defined. You simply cannot go and buy any bond to get them. Point to be noted is, if you are unable to use this amount within a certain period of time, in that case, you can deposit the amount. You can deposit the amount into capital gain savings scheme account before filing the income tax return, which is coming up really very fast, and you can withdraw the money from there and invest it within the specified time period. So अगर आप invest के लिए घर ढूंढ रहे हो, in that case, but you are not getting any suitable house, in that case, it's better to invest the amount into capital gains savings scheme account and withdraw the money within the specified time period. Now, having said that, now let's try to understand what is the advanced tax implication. Now, advanced tax is required to be paid in case there is a tax liability after TDS claim and everything is coming to 10,000 rupees, going beyond 10,000 rupees. Now, these advanced taxes, it needs to be paid on a quarterly basis, right? And there is a set percentage for that as well. Now, advanced tax needs to be paid on 15th of June, 15th of September, 15th of December, and 15th of March. Now, it needs to be paid for each of these quarters before these 4 dates, right? However, the income tax department acknowledges that since you don't know what future payment within those dates, you can avoid the interest under sections, right? So for 15th of June, there is set percentage 15. So let's assume you have a 100 rupees tax liability at the year end, right? So before 15th of June, you need to be paying 15 rupees. Before 15th of September, you need to be paying 45 rupees, which is cumulative. So in this second quarter, it would be 30 rupees. You need to be paying another 30 rupees before 15th of December, and remaining 25 rupees you need to be paying before 15th of March. Now, if you are missing the payment in that scenario, 1% interest per month is applicable under two different sections, 234B and 234C. Now, 234B kicks in if your outstanding tax liability is more than 10% as on 31st of March. And if you are missing any payments, if there are any shortfall of payments of advance taxes before these due dates, 4 due dates, in that case, on the remainder of the amount, you need to be paying 1% per month. Now, if you are following the percentage, set percentage, in that case, you can always avoid interest under section 234B, that is 1% per month. Now, we are at the end of our webinar for capital gains. Now, we are going to take a look how you can file your tax return using ClearTax platform and take advantage of ClearTax and Dhan's partnership. Just give me 1 second. Right. Now, in this slideshow, we are going to see how you can file your income tax return using ClearTax platform. Right. So firstly, you need to come to the ClearTax platform and you need to be logged in to your account, right? And once you logged into your account, you can start the filing for yourself, right? You can choose to hire a tax expert or hire a tax expert to file your income tax return, or you can file your tax return on your own. Now, once you do that, you will be taken to this prompt wherein you need to be logged into the account. Now, once you logged in, your dashboard will open up and it will give you the flow of income tax return filing. Over here, you can simply just click on start filing and the filing process will begin. Right. Before you start your filing, you need to be pulling the data from the income tax portal so that you can be filing your income tax return with minimal amount of documentation. Okay. So to do that, you need to be linking your PAN, right? So you need to be inputting your PAN number and date of birth, and you need to get a couple of OTPs from the income tax department. Right. Now, after doing that, you will be taken to upload the form 16, right? This is the basic amount of salary that you may have, right? You can simply just drag and drop the form 16 and all the data will be automatically parsed from here, right? Once you do that, it will take you to the filing page and the actual filing will start from here, right? So on the first filing page, you will get to see your personal information. You need to be filling this thing and all the other information like your Aadhaar number and date of birth, address, mobile number, etc., all needs to be put in there. Additionally, your residential status, it will be set as resident, tax resident as a default. But if you are a non-tax resident of India, so you can choose the option over here. Bank details, etc., you need to be putting over here as well. And once all the data are filled in, you can just click next and it will take you to the next page, which is the income pages, right? So as of now, there are 5 heads of income present, right? So if you have uploaded your form 16, then you can simply move ahead to the next pages. And if form 16 has not been uploaded, in that scenario, you can upload the form 16 over here. If for some reason form 16 data are not getting parsed automatically, in that scenario, you can add the form 16 details manually. Right. After doing so, there are 4 other heads of income coming in your way. One is your capital gains, one is your business and professional income, one is the other sources of income, and finally your rental income, right? So all these details you need to be filling in. Now, this is how in this slide, we are going to see this is how we have made life simple for Dhan user for ClearTax platform. Right. So if you get into the capital gain segment, you will come directly to this page, wherein you can see there is broker. Dhan is listed as one of the recognized broker or a partner broker, right? So you need to be clicking Dhan. And once you do that, it will ask you to log into your Dhan account so that it can fetch the data automatically from the Dhan platform, right? So you need to simply just click and log in and import the data. You can input the data in this way, and all the data will be pulled from the Dhan portal automatically to ClearTax portal. Not only that, the data will be sorted out based on the dates they were sold, so that you don't really have to do everything manually. So all the data will be correctly tagged for long term or short term. Not only that, appropriate rates of taxation will also be applicable for it. Right. After that, if you have any other classes of assets, say for example, you have some foreign shares, if you have land or building, stock option, RSU, etc., all these things can be declared over here. Any capital gains arising from sale of these assets can be listed over here. Right. Once you do that, if you are holding shares, then quite possibly you have some dividend incomes, and everyone has a savings bank account. So they may be having some savings bank account interest as well. So all these detail you can input over here. So interest income, dividend income, if you have any agricultural income, if you have some exempt income, for example, PPF ka interest. So all these data, all these details can be reported over here. Right. So you need to be just looking into the income statement. You can refer your AIS and 26As, and in some cases, bank statement as well. And you will get to know under which head, respective head, the appropriate amounts of income are arising. Now, once you do that, you will be taken to the next head of income, that is rental income. So if you have a rented property, so if you have let a property out of your own, then it will be there. Right, you can report the rent from there. If you have taken a loan for this property to acquire this property, you can report that interest, and you can claim expenses for that interest out of this rental income. Now, if you have some VDA, virtual digital asset, so cryptocurrencies for that matter, so you can report the gains and all in the appropriate tabs as well. And for crypto, again, there are a lot of brokers we have partnered with, and we are reading their capital gain statement as well, just like Dhan's capital gain statement. All right. After that, you will be taken to the tax saving tab, wherein you can input all the details. If your Form 16 is generated on a new tax regime, in that scenario, definitely there will not be much of deduction. Only standard deduction will be there, amounting to 50,000 rupees, right? No other deduction will be present, because under new tax regime, nothing is actually allowed. But if you input the data, right, for house rent allowance, if you put the data for home loan, if you put the data for ATC deductions and all, ClearTax platform will do a calculation or an automatic calculation and analysis based on the data that you are inputting, and select the base regime for you without any complications, right? So you can choose that. Now, if you have any other deductions like medical insurance or donation to charitable institute, all these things can be captured over here, right? Now, after you do that, it will take you to the last page, wherein you will be shown a final tax position, right? Now, the final tax position is whether you can be a tax neutral position, that is what you are not required to pay any taxes, a tax positive position, or a tax negative position. Now, tax negative position, that means you have actually paid a higher amount of taxes, or a higher amount of tax has been withheld. So your ultimate tax liability is lesser than that. So you are getting a tax refund. Tax positive position in this case means that there is a shortage of TDS on your income, and therefore you are supposed to pay a certain amount of taxes. Now, this situation, tax payable situation, come for various reasons. One of the reason is you are getting some dividend, and on that dividend earning, only 10% tax is deducted. However, the dividend should be taxed at the rate of 30% or your slab. Also, if you're switching job during the year and the new employer has not considered previous employer's salary, in that case, you could see a huge amount of tax payable coming in your way. So be careful with that. Now, after all this, you will be getting a message wherein it will show which is the best regime for you, right? You can simply do a quick check between these two regimes and you can move ahead. And once you move ahead, you can pay your dues. And once you pay the dues, all the challan details will need to be put in. And once you do that, you can simply just go ahead and file your income tax return. Not only that, you will be able to e-verify your tax return as well. Now, once you complete this step, you will just need to pay and close the income tax return filing, right? So this is how it is. You can e-verify your return. You can e-file your tax return using ClearTax platform without minimal amount of fuss. And if you're a Dhan subscriber, in that case, the Dhan's capital gain statement is read by ClearTax platform. So there is no need for you to download and upload all the capital gain statement, or worse, you don't need to report the capital gains by manually entering it. And once you e-verify your tax return filing process is completed, the return has been submitted, and you will get an acknowledgement for the tax return that you have filed. Now, if you have any doubts, you can always contact the expert assisted income tax return filing, which are available at a very attractive price. Now, we are actually going to end our presentation because we are going to take questions for some time, and thereafter we are going to conclude the session.
Awesome. Thanks a lot, Saikat. That was actually very insightful webinar. I'm pretty sure people have gained a lot of knowledge actually. There are like some very few questions that people were asking in the web chat. Okay, I'll walk you through some few of them. The one of the most important one and the elephant in the room actually after today's budget basically. The like what would be the impact, like what are your initial thoughts on this, like how does like it look like for the investors and traders on the STTG, small short term gain capital tax, which has been increased, as well as the LTCG, that is the long term capital gains tax?
Well, for short-term capital gains, uh, I think this is a bold move from the government side, because previously there are too many rates of taxation, too many different type of class of assets, right? So they try to make it simple. They have tried to make it financial asset and non-financial asset, right? So in this way, they have tried to make the life of the investor simple, and they have tried to bring uniformity in the rates of taxation as well. So for financial asset, long term, the rate is coming to 12.5%, right? And financial asset, uh, long term, which is not equity or anything, the rate was there at 20%. So that rate has also been brought down to 12.5%. So that is a good move, I would say. And all the other things, the security transaction tax increasing, that is actually because India is looking at a surge of traders. People are getting into the market. So, so the government is actually acknowledging this fact, and government is taking a cognizance that if people are trading, right, if they are doing F&O trading and all, so they are suffering a huge amount of loss. Right, they could be facing, because frankly speaking, people, when they get into market, they don't know how the market actually works, how it gets triggered, right? So if you are absolutely sure about it, then get into it. And to do so, as a warning sign, they have increased this STT, security transaction taxes. But I think people who are knowledgeable about the market, who knows the risk and how to read the trends and understand their risk, they
Mm.
will never be discouraged, right? Because they know ins and outs of the market, they will be able to make money without any problem, right? And this increase of 1%, that will not impact them in any way or any shape of matter. Only people who are not really serious about it, they may really have to be discouraged, or they may get discouraged. But the people who are the actual investor, they are intelligent people, they will definitely not be discouraged.
Awesome, awesome. Makes sense, Cycle. I have a very basic question actually, but I'm believing that a lot of users who have joined in are like very new to the whole taxation system only. Like, can you just like briefly explain what's the kind of difference between the old regime and the new tax regime, which the government has instituted?
Right. So basic difference between the new tax regime and old tax regime is the rate of taxes and the deductions, right? So in the old tax regime, we used to get a lot of deduction for a lot of expenses that we are making, right? However, the rate of tax for that was quite high. Now, in this day and age, it's becoming difficult to maintain all those investment proofs and all. Again, it is understandable. No one has the time to go ahead and read the offer documents and analyze which is best. So to give them a way out, government has introduced this new tax regime wherein no deduction is available, only specific deductions are available, but you get the benefit of lesser rate of taxes. Now, in the last budget, not the interim budget, the budget prior to that, in that budget, government has made certain changes which made the new tax regime a little bit more attractive. Now, government has tried to make the new tax regime a little bit more attractive as well. Now, we will need to see how the numbers will factor in with these new slab rates and rates of taxation, and we will get to know better how this will actually play out.
Awesome, awesome, Saikat. I can see like the questions are like uh, uh, one was actually what are like a user of what are actually STT tax charges? Like how does that the government decide? Like just Saikat, like very in a very easier way to explain. If you can like explain what are STT and like how does that apply? Can you explain it, please?
Right. So security transaction tax is the tax that you are paying on purchase or sale of your shares.
Yeah.
Right. So this is actually is 0.01 sorry 0.02%, whatever transaction that you are making on that, this is the amount you need to be paying. Now this is security transaction tax is put in place so as to track the transaction everyone is having, right?
Mm.
Originally, security government used to collect taxes from security transaction taxes when in the olden days when long-term capital gains was not taxed at all. However, now it has become a tax collection mechanism for the government. So every time you are getting into market or getting out of market, you need to be paying some amount to the government to get in or get out. As simple as that.
Awesome. That's like very easier way, Saikat. Uh, very nicely explained. One more question, actually. This is the last question. Also, it's more on the industry-wise, like opinion, which I would like to have. Do you think the taxation, the new taxation, that is the increase in the STTG and the law LTCG, do you think the increase actually will affect a lot of volumes? Like people won't turn up, like the retail participation might go down because of the huge tax rates here in FNO particularly.
In FNO, yes, there could be a potential downside, what I feel,
Mhm.
right? But FNO is your business income. So business income still remains the same, actually. So instead, on because of STT,
Mhm.
security transaction taxes, we can see a lesser volume, but it will not drop down significantly. That is what I feel. And for capital gains, so people who are investors, they don't really actually have to worry because they are in this for a long period, right? They are not in after 3 months they are getting out. They are in for at least 4, 5, 6, 7, even 10, 15 years, right? So there is no worry for them.
Awesome, awesome. Saikat, very thankful to you for taking out your time and like walking us through the whole guide of like how the taxation work for traders. I'm pretty sure that the users have like benefited a lot. So thanks once again for joining in.
You are most welcome, and happy filing.
Yeah,
All
thank
right.
you.
Welcome. Bye bye.